Good morning, traders. This is Brad Matheny. It is very early in the morning, almost 2:30 Pacific Standard Time or Pacific Time. I'm in California. Was going over the metals charts recently and love this setup in gold. You can see we've got a big reversal of the upside setting up right now. I called this very, very well on this pullback. You can see I drew this blue line here indicating we'd likely find some support down in this area. We got a little below it. This was technically a double bottom setting up over here, 97% Fibonacci retracement. Beautiful pullback. I mean, really just lovely off of the fear that was setting up with the war overseas and credit event. And now we have the war in Israel setting up. I mean, it is just a beautiful move in metals if you understand what I'm talking about. We've got a very solid flagging formation with divergence over here on stochastics. We've got weakening RSI, which is likely to hook back to the upside. We've seen this flush out low with fairly strong volume. Okay, you can see we had this big volume bar right here on this downward selling. Now we're looking for increasing volume like this into the upside here. So let me see if I can make this a little brighter, darker. Okay. And so now we're looking for some increasing volume like this or like this in a rally phase, kind of like this here off a bottom. So we'd be looking for this week to be pretty strong, next week to be stronger, next week to be stronger. And in reality, ladies and gentlemen, this is off of this base bottom here. We're likely to see it come back up into this area, into the 1999 area, 2010 roughly, and then begin to elevate higher. Okay, this is a very, very solid bottom for metals, and I want to highlight the fact that we're in this phase of what I call the setup phase. We're exiting the setup phase. The exit of the setup phase will prompt us to move into a rally phase, which will drive us up into the breakaway area. So we've got right now a potential for a move, and I'll just do the math here real quick. So somewhere where we're at right now, of about a 22 to 20 to 32% rally phase in metal, about a $600, call it 350 to $600 rally in gold. And that's going to move us away from this setup phase into this breakaway phase. We're very solid right now. You can see here on the monthly trend, we've seen an upward swing, a nice rotation. This is likely going to end up rotating here into what's called flutter as we move higher and then eventually come down maybe. This is going to roll back up to the upside as traders move away from risk and into hedging assets. Right now, there's a big move supporting the SPY, which I believe is going to end this week and next week. This is basically the chaos in the world is driving assets into US dollar-based equities. We can take a look at that real quick. Get rid of that. So you can see here, this is my SPY chart. And you can see here, I've got a lot of little annotations on here. This is telling us where we're at. We're actually over here at a 90% cash ratio. Well, it's actually a 50-60% cash ratio and then hedged properly in the Mint rotational modeling system and the Mint expert growth setup. I do believe that we are going to come down and reach this area, which I've highlighted on this line right here, that area right there. I do believe we're going to come down into the 404 to 396, 392 area, try to find support, and then potentially rally back up into this area, indicating a wave one, or we're going to come down further like I indicated here, setting up an ABC wave in the SPY, and then we will rally up to a completed wave one. That would be essentially A, B, C for a wave one, possibly D, E. But what's beautiful about this is that we are seeing assets move into the US market, US equities market. And the reason they're doing this is much after COVID, similar, we're looking at the US economy being the strongest on the planet, away from general risk right now. We've got a fairly strong economy, fairly strong consumer. Yeah, we have inflation problems, so does the rest of the world. Yeah, we have debt problems, so does the rest of the world. Basically, capital is moving into US dollar assets, and from what I can see, moving into longer term large cap assets, and particularly parking itself there for dividends, for earnings potential, and for safety. Now we do have this longer term GAN fan from the Fibonacci, from the COVID base bottom. You can see we've got this arcing level right here that's coming very close to this level here with the Fibonacci price amplitude. We are likely to see a base here at some point coming back down into this area. I believe that we're going to find a very strong base into this area. In fact, I will highlight this with an ellipse, and I will highlight the arcing area, the Fibonacci price amplitude base, and that puts us pretty much right here is where I think we're going to probably find some real solid base. Okay, and I will make this yellow. And again, this is, you take a look at it here. Let me spread it out and try to show you where we're at with this. And you can see the GAN angle here. Let me try to get it. There it is. So we're in this GAN angle coming down, and we're going to likely come back down to this Fibonacci price amplitude arc, which aligns with the GAN angle as we come down this area here, falling into the Fibonacci price amplitude arc and the GAN angle. We run into this horizontal support right around 394, 393, roughly to this 404 or 300 and the 404 area, roughly right up in here. And that, again, ladies and gentlemen, is likely going to be our long-term support. That's why I've drawn this right here. This is our likely long-term support where the market's going to try to come down. It's going to try to weaken through October, maybe into early November, and maybe even into early December before we run into this support channel. And I believe we're going to probably find the basing and the bottoming happening not necessarily in early January, although we could. I think we're going to maybe look at it in, early December. If I go back to a weekly chart, this will give you a better idea. So we're really looking at a potential base bottom, maybe end of November, early middle of December. I think we're going to be right in this area, which will put pretty much right in this area right here. And we'll be looking for key support. You can see I've got a little support level here that's being drawn off of historical range. And I want you to realize that that support level, as well as these levels here, which I'm drawing as key target areas, are fairly important. So I'm targeting this area, late November to roughly December 15th, 18th, 25th, right around Christmas, to see the markets continue to move downward. Even though assets will be pouring into the US economy, we're going to see it move downward. We're going to see it move into a sliding downward trend, trying to find support around 404, 405. That means that gold and silver should accumulate. I'm going to try to take a look at silver here. Silver on a weekly basis is setting up a decent bottom off of this very strong wick low. Let me drag this a little bit. Very solid Harami pattern here. We'll see how it plays out. Haramis are pretty common around bottoms. So you can see here's a Harami pattern, here's a Harami pattern, here's a Harami pattern. You get them. Here's a Harami pattern. I highlighted this one. Here's another one here. But again, we're getting very solid basing bottoming. And what's really important to understand is that price is moving upward. So you can see here, higher low, higher low, broke through it on panic fear. Now, what does this panic fear mean? Well, this panic fear means that we have come to a flag apex and we have broken out of it. We've actually have this right here being drawn, and I'll make it 4 points, and I'll make this 4 points. And what we really have, ladies and gentlemen, is a broad flag apex coming across this area. And likely coming across this area. So I'm looking for rejection. So I'm picking not the highs here. I could come all the way up here and pick this high, but I'm looking for average price rejection across these opening body ranges, and then into this area where we had rejection, 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 and this gives me my flagging formation. And what we have here is we have an apex. Right here is our apex. What is likely to happen in this apex is that we are going to see volatility, potentially a false downward breakout, which is what we have here, rotating back up into this area, 2430, 2450 for silver, and then attempting to rally back out into the 28-29 area as we try to move away from this false breakout. So this is what's called kind of a washout low. What this does is we're nearing the apex. We get this kind of a false move, a little bit of a panic move. It washes out some of the longs. It targets some of the long stops. And then we get this rotation back to the upside. So like I told you, I really do believe that metals are going to be acting as a hedge moving forward, and I believe we're going to see this rally back up into this apex area right over in here. Draw an ellipse again. Right into this area. So basically 24, call it 23.95 to 24.50, finding support, maybe basing for 5, 6, 7 days, and then rallying back out of it. And that should put us maybe around end of October. So we have a potential here for a move upward of about 8% in silver. And then we have a potential move of roughly 14%, almost 15% to get up to the $28 area. Now that would, at $28, I believe put us, yes, it looks like it would put us at new all-time, well, not new all-time highs, but damn close. So let me see where we're at here. Yeah, that would be pretty well new recent all-time highs. We had been higher back over here, but in reality, this would be a solid breakout to the upside. We would see a very solid move. You can see here, we're getting a very clean downward cycle trend with a breakout. It looks very good in my opinion. And I want to just highlight the fact that, you know, we're getting into a very interesting mode for gold and silver in the sense that, you know, we're getting this breakout to the upside. We're getting a pretty good trigger, which may indicate a big upside move setting up for gold and silver, just as I have been predicting. And remember, we're going to be moving into that, you know, away from the setup phase. I want to show it to you over here. Okay, away from the setup phase and into the breakaway phase, which is up here. So this is our move in silver. We're likely going to see this move, highlight what I want to highlight, from where we're at now up into this area, $42. That'd be a 91% move in silver if my analysis is correct. And remember, this is the same analysis I've been telling you for literally 6 months, 8 months, a year, that we were in this basing phase, that we were in this setup phase. We were looking for long-term support back in this area. We found it. We've now got this higher low set up, this washout low. Now we're in the rally phase. Like I told you, once we get above 28, 29 to the upside, there's going to be a lot of momentum to carry this up above 34, 35, 36 fairly quickly, and possibly, by February, March, April of 2024. So at the same point in time, gold is going to do very well. Now let's take a look at platinum. Okay, platinum futures. You can see I've drawn a bunch of lines here before. Take a look at my lines. We've seen the same kind of a washout low. We do have the higher low set up, so understand that we do have this deeper COVID low coming up to this deep low here, coming up to a deep low here. So we are getting higher lows. We are getting some moderate support across this area. So understand that this provides very good support for the market. Obviously, if we get below this, we are looking at this as resistance. We are in a fairly solid consolidation phase here. We are looking for upward trending. This is weekly. Again, platinum is still seeking out a bottom. Let's take a look at daily. Platinum typically lags a bit, so I do like platinum. I mean, at 872 roughly, this is a great buy considering we're going to probably be up at around 1100 by February, March, April. And that's really kind of where I would highlight this. You've got about what would that be? About an 18% rally up into this area, 25, 26% rally. And why would we get there? Because again, fear. Fear drives investors into hedging. And we are looking at a potential credit crunch. We are looking at central banks trying to provide liquidity to avoid risks. You know that the Fed, Fannie Mae, recently started a new 5% down on large properties, multi-unit properties. Basically, we're back into the, please buy my house, please keep the credit markets running, don't stop buying. And that's where we're at with this. So that type of a long-term hedge with China consolidating, with Europe consolidating, with Israel at war, with Ukraine at war, potential conflicts with China, China consolidating. I see that we are going to do nothing but melt upward in this manner over the next probably 12 months headed into the election. Then maybe around the election, we might be near all-time highs or at all-time highs for metals, but I think we're going to consolidate a bit after the election, depending on who wins and what actually happens. So again, very exciting move in metals. We need to see this platinum bottom set up. We need to see gold continue to move higher. Gold, like I said, is setting up a beautiful bottom. I can't explain this to you any more than very deep V bottom, likely going to rally back up here to 1999, base a little bit, consolidate, and then try to attempt higher. Once we get above this high here, so I'll call it 2016, 2017, then I think we're off to the races, folks. At least off to the races up to my next phase, which is that breakaway phase, which is right up over here. This is the breakaway phase. So once we get up in this area, 2400, 2500 is not out of the question for gold. We just need to get out of this end of the setup phase and really see a rally setup. And the next 60 days are going to be really critical for us to see what takes place. Okay, if you like my research and you like what I do, take a look at what I do on my website. Like I said, I'm moderately long term. I'm not into 2-minute, 1-minute trends. I'm into swing trading, and I use my knowledge and my research, which is over 25, 30 years experience, to help you understand where we're at longer term, intermediate and longer term. My research is available to members on my website. And like I said, I want you to be aware of this gold and metal setup because it's extremely exciting in my opinion. All right, guys, that's it for now. Talk to you later.